Boom, we are alive, ladies and gentlemen. Episode number 2, as you can see, and probably hear, it's raining out here in the jungle. We're going to be going over Cardano as it moved outside of the box and created a primary SOS, our sign of strength for the day. It looks very similar to what we went over earlier, so we're going to just dive in. On the 4 hour, not too dissimilar to what we looked at earlier today, 1 inch. For those of you that don't know, we study the Wyckoff method. It is extremely powerful. It uses supply and demand characteristics to measure where we are in the market and most commonly focuses on horizontal trading ranges. Here we hit our primary support, our buying climax, we had our shakeout, our automatic rally, a nice upthrust, and then into a spring. So now that we've jumped outside of the box, clearly, one of the things we want to do is recognize this fact. So for those of you that have been studying where you're not, these signs of strength, what we call an SOS for short, are the first move outside of a primary trading range that shows us how strong this profile can be. Now we've seen a few characteristics here that are bullish. Primarily we are in the middle of the bull market, and I've said a few times that this is usually where things start to get quite dramatic. So as we move outside of this box, you know, anyone who's looking at mostly price indicators or just candles and moving averages, they're ignoring one of the most important parts of this story. And one of the most important parts of the story that most people do not recognize is down here. It's the supply signature. And I don't know how people manage to forget this, but the supply signature is extraordinarily valuable. It shows us how much supply came into the market and how much the price moved based off that supply. Now, we work off a fairly simple idea of something, I guess, dubbed the laws of effort versus result. Me, primarily in my life, with everything that I like to do, I like to make sure the result that I'm getting is higher than my effort that goes in, right? So if you have a higher amount of result for a decreased amount of effort in the price spread, this is what defines the SOS. So here in the upthrust, we saw a significant amount of supply coming into the market and not a whole lot of price spread. Here, today, this SOS represents the first sign of strength, where we have a very similar supply signature here and here, but this time an increased price spread. Now, we can often watch this on the downside too, and that's usually what leads to the spring. Now, it can be a little deceiving, this moment here, this upthrust and the spring action, but there's a few ways to measure it. Generally, the primary shakeout, the first kind of drops here, are where I like to find an equivalent to my spring. And we did see that. Here is the primary support. Here is our spring. And even our shakeout was almost equivalent in the amount of supply that came into that signature. And here too, again, the amount of effort it took to get this upside result is diminished as in compared with the amount of supply coming in and the result that we've got today. So these are two very, very important factors. A next big part of the question I'm sure everyone's wondering is, well, how high will Cardano go? Now, we're already well along our way into this bull market. If you are late, the risk to reward relationship is drastically reduced than compared to where we were when we were talking about all these plays back in November. If you had entered back in November, you were already up 10x on Cardano. And that's important to remember because most of you who are new here do not show up at this ever so important time between October, November, December, before the bull market technically went into full swing. So now that we're midway through this market, a big part of the question is everyone's like, oh my God, well, when do I take my profits? You know, it's more about making the proper entry than it is about making the proper exit. But for those of you that want to know, one of the ways I like to measure this, we take out our trusty Fibonacci retracement tool, and we measure all the way down to the bottom. Now, because we are already so high up, it is very unlikely that we get extensions all the way to the 4236, which would put Cardano up at $6. Now, midway through the bull market, I have seen consistent moves to the 236 and the 1618. So that means moves to around $2 to $4 is a pretty easy play, right? This is a pretty easy signature that I think we will get to in the next extension. Now, to extend all the way to $6, very difficult to do. A lot of supply and pressure would need to come in. And because of how far we are along in the bull market, I just don't think that's going to happen. So let's be conservative. Let's go around $2.70 to $4 or some pretty easy areas for Cardano to move into now that it's broken outside of its box. I like to use the mixture of both my Wyckoff trading ranges and the Fibonacci extension tool to gain a grasp of, well, it's kind of a risk and a price assessment. We took most of the entries for Cardano back here in January. If you go and look at our video that we did with Charles Hoskinson, which is, I believe, the entry to this video, if you have not seen it, please watch that podcast. I took bets on Cardano because I like Charles. And fundamentally, as a venture capitalist, often what I'm looking for are who should I invest in? Now, one of the fun things is if you go back and you do retrospective studies, which I definitely suggest you do, take a look at these beautiful horizontal trading ranges that were taking place back in November. Here's a beautiful horizontal trading range here. And think about how valuable this is to you now versus where we are today. And this is one of the difficult parts too, is that back in November, December, when we were talking about Cardano, this is when it was most valuable to make entries with very little risk. Here, any entry that you make is at a significant risk. And there's a reason for that. Bull markets usually move up in two functions: a market accumulation, up, and then a market distribution. And in the middle of this market, you have a reaccumulation. And right now, what I believe we're witnessing is this reaccumulation pattern that's pretty much dead center in the middle of the bull market. So when we're on our way up to distribution, it's the movement down to accumulation, reaccumulation again, that's difficult. And often the bull market will go up, it will shoot up into distribution, and it will come back down, usually actually below the midway point of the market cycle itself. For Bitcoin, this would have been 6 grand approximately, just for kind of rough estimate's sake. And you came back and you reaccumulated between $3 to $6,000 for about 2 years afterwards. Right, so the risk to reward relationship here is still very high. There's a lot of room for maybe a 2 to 3x move, but we could come down lower in the next market distribution to say 40 cents, 41 cents, 30 cents, even if we go up to $4 now. So please be aware that when we are in the middle of the bull market, which is where we are, these plays are a lot riskier. Anyways, this is Teal with the Arcane Bear. Remember to go to the channels down below, whether it's on LinkedIn, Instagram, or YouTube, or whichever the ones I'm pointing at, and follow us on those channels. Please leave your thoughts, your comments down below as well. Give us the thumbs up if you like this content. And if you are new to the channel, remember to click that little subscribe button. And for those of you that are subscribed, make sure you click the little bell notification. We will be doing more short videos like this, kind of focused on one-off education aspects about different tokens. So we hope you guys enjoy this content. Because we are such big fans of the jungle, what I'm going to do now is I'm going to leave you off with like 30 seconds of the jungle, and this will be my exit.